the 224th Block Talks, we speak with Jin Kwon, co-founder of Saga, who talks about the path forward in a multi-chain world. I'm your host, Mauricio Magaldi, and this is Block Drops, your weekly digest on blockchain for business. These news are not a form of endorsement, sponsorship, or encouragement for consumption, and are meant for educational purposes only. All right, everybody, I am here with Jin Kwon, who's going to tell us who he is and what he does with blockchain. Jin, welcome to Block Talks.
Hello, great to be here. Yeah, so I'm one of the co-founders at Saga. Saga is fundamentally a change to launch chains. Essentially, what we wanted to do was simplify the process of launching app chains so that you can go and automate it essentially on chain. So you put a transaction in on a chain saying, hey, I want this chain with this configuration, and without talking to a human being or doing any BD or really anything, within about 2 minutes, a blockchain of that configuration is just kind of stood up for you, and you have access to like an RPC endpoint and an Explorer essentially that you can use. That's kind of like the fundamental basis of Saga, and then we have various other things that we built on top of that. So
great. So we're going to explore how you got there, but you didn't start there. So you had a pre-crypto journey. So I'm obliged to ask, what is your crypto superhero origin story? How did you come up with, how did crypto came into your life? What triggered your interest? How did that play out to then, and then we can go through the path that took you to Saga.
When I started my career, I was originally an engineer a while back, but when I started post kind of college with my computer science degree, blockchain didn't exist. It was I graduated in 2008, which is like when Bitcoin essentially was first kind of formed. So I actually did research and a lot of like studying on computer architecture, which is like chip design and things like that. And I did a lot of research around queuing theory and photonics, which is like what it was like, computers are mostly electronic based, and there's various properties of electrical channels. And our goal was to try to figure out what kind of architectural changes will need to happen if you replaced big data communication between cores essentially with optical channels. And there's like different interesting things to talk about. And so after that, I worked at Intel for a little while as an engineer, but quickly realized I really didn't want to do engineering anymore, because as you go deeper into an engineering career, you tend to kind of narrow down your scope. You become very specialized in a very small part of what you're building. And so I didn't like that. I wanted to broaden out a little bit more. And so I went out. I went to business school actually at Chicago, and then jumped out on the other end as an investment banker. So I was doing advisory work and M&A work for large tech companies for a little while. During that time, so I do have a brother who was really kind of obsessed about blockchains. His name is Jay. He's the founder of of Cosmos and Tendermint originally. And he was like, hey, I'm building a startup essentially that is around this concept of app chains ultimately. And so it took a few years for him to kind of convince me to fold my career that I had, and then jumped in. And I actually joined Tendermint really early on. Tendermint is the company that built essentially the Cosmos stack and the Tendermint consensus algorithm. And I joined like a year before we actually launched the Cosmos Hub, which is the token Atom, essentially, that everyone kind of knows about. And then I was there for a few years and learning a little bit about app chains and finding all the pain points of launching app chains and why like developers choose not to do so. And so with that lesson, I decided to launch Saga essentially to simplify it as much as possible. So
I love the stories of entrepreneurs that see a problem that no one cares about, but it's damn annoying to them, and they're like, "I'm gonna fix this myself." I love that, and I think those yield to probably the best results and also the best stories, because it just gets so enamored with the problem. Not usually you get people that get so caught up into the solution, but when you really you're in love with the problem, you go find something to fix it, and I think that those yields the best stories. So can you outline what were those problems, and what was the thing that really made you like angry enough to go fix it?
Yeah, yeah. So the problems with app chains is that I think Cosmos does a really good job of creating kind of like an SDK that allows a developer to go and kind of build their own layer one essentially. However, the annoying part of standing up a layer one, it turns out, is not really. I mean, the SDK and the software stack that allows you to do that is a good foundation, but there's way more once you design the product to go to market with it, essentially. And so, one thing that's a big problem is um, you need to stand up a validator set, which means necessarily that you need to convince a whole bunch of third party validators to go and run your actual blockchain essentially. And why do they do that? That's because they want to earn some kind of revenue from operating that validator business, which means that you need a staking token. You need to create that staking token such that there is some value for that staking token. So let's say let's assume that you wanted to build a product that does something. Let's say a simple dex or something like that. Not only do you have to actually build that dex with the app chain in mind, you now have like this whole slew of other things that you have to do beforehand to even make this work, which is you have to have a token, as mentioned. You have to essentially ICO, right? You need to get that into the community such that there is enough volume and there's enough value for that, and then you need to convince validators to run your network. And so all of these steps is multi months of actually development, in addition to the application that you're building. And so that was the primary kind of first tackling point that we were trying to fix, essentially, which is let's abstract away the security part of this, which is the whole staking token, the validator part. And what Saga essentially does is it borrows the existing validator set and the staking token essentially, and the security essentially. So every application that launches on Saga automatically kind of inherits that security and the validator set automatically. So that was like step one. Turns out that's a very small tip of the iceberg essentially, with a giant iceberg underneath the water. Which is, in addition to that, there's all these services that you need to build if you want to build your own app chain ultimately. So one of the things that's a big problem is bridges. So bridges is let's say you can permissionlessly launch an app chain. A bridge, for example, you have to still go and BD. You have to go and convince that bridge provider, hey, my chain is worth adopting, pushing an implementation for. And sometimes that can take months as well. So regardless of if the app chain that you launch is instantly accessible or not, there is a kind of a month-long BD pipeline to get your chain loaded up on a bridge, essentially protocol, which then comes back to the same problem as I described with the validators as well. It's like those bridge providers won't do something unless you have traction, and so then now in order for you to even begin this process, you need to demonstrate success essentially, which puts a lot of barriers to entry for anybody who wants to launch their own app chain. And so that was one of the reasons why I've noticed a lot of people kind of going more towards launching on something like a shared layer one, like Ethereum or Solana, or a shared layer two, like a base, right? And so one of the things that we worked on immediately afterwards, after we launched, was what's called liquidity integration layer, which is it allows you to piggyback off of the bridge relationships that we as a protocol have, and share it with everybody within the ecosystem. So every chainlet that launches automatically have bridging and routing essentially supported through the liquidity integration layer. So that was, and then you can kind of see like the pattern here. We identify the problem and we're like, okay, how do we fix this? We figure out a product suite inside of our platform, and then we go to the next one afterwards. And so that's where we're at right now. Essentially, we launched liquidity integration layer earlier this year, essentially to help our developers kind of bridge in assets from outside of the ecosystem in from our ecosystem out, essentially.
That's a very interesting approach, and I do have to ask. I'm a product person myself, and prioritizing is a nightmare, especially when you're going from problem to problem to problem. Sometimes you can't identify what the highest value problem to solve is, because there's maybe not even enough data for that, or because not everyone sees that as a problem. So you can't fix that. So how is your process and the process with the team to really go to what's the next one? What's the next thing? Is this Do you have enough of an ecosystem to provide you that feedback? Do you do a lot of testing? What's your mechanism in just our curiosity? What's the process for you to prioritize what's next?
Yeah. So our primary way of doing this is um, very different from the approach most other crypto projects kind of take, which is um, we actually tend to release our product and software to the world a little bit earlier than we should, essentially, because especially because of this reason is we don't know what the priority is until people start building and we're like, oh yeah, that is definitely a priority, right? And if you one of the things that's difficult in the blockchain space is that um, it's all very new, and so there's not like a established set of things that everyone really is looking for at all, like that you can kind of tap into, like in traditional businesses. And so you have that's what you kind of have to do is you have to release out like a prototype of what you're trying to come out with, have people use it, and then gather that feedback. And so our internal ways of doing things is a little bit more product driven, where we kind of release something and then we don't prioritize things until we kind of settle upon a few builders who are building things, and we'll hear feedbacks pretty quickly. Okay, this is a giant problem, essentially, right? And so that's what we did. So when we launched our mainnet, we had the chainlet to launch chains. We didn't have this like bridging aspect of it. And what we were like, the original theory was that, hey, maybe the individual projects will go and solicit bridge partners to bridge assets directly onto their chain. Turns out that's a massive problem. And so we heard that pretty quickly. And so what we did immediately after we launched was kind of focus on the bridging and routing aspect of it with liquidity integration layer. And so that's kind of how you have to operate, unless you have a massive team that can focus on everything all at once, which we do not. We're a pretty relatively small team. And so that's at least the way that we do it. Um, Blockchain projects generally don't do this, which is kind of surprising in my opinion. I think it's also because a lot of projects out there are very research driven, and research doesn't do this, right? They kind of have an end goal of like, hey, we're gonna make something like ZK work. We're gonna research this project, this part of the stack, kind of regardless of if people want it or not, right? And they kind of focus on that, and that has always been kind of more of the culture of crypto, in my opinion. But I think we take it a slightly different way. So
One thing that caught my imagination when you were describing how things are working, you said without human intervention. So you're launching a new app chain with minimal interaction, and it comes with bridging, built in into the wider ecosystem, which is something that also depends on a lot of people. Now, it makes me think about the agentic economy or the agentic web as we're seeing emerge with the use of artificial intelligence in a variety of ways. And crypto is not different. Crypto's capturing a lot of that kind of convergence on AI. It made me think of, will we see an agentic chain that launches autonomously and then bridges autonomously in support of some weird intent that a user put in that AI? Is this something you're exploring? Have you tried anything in that regard? Walk me through a little bit of that, because I'm really intrigued by this intersection between these two emerging techs.
we have quite a few builders actually focusing on agentic activities. Um, but it's a wide gamut of where that agentic activity is like kind of taking place. A lot of them is in the application layer. So a lot of the one of the benefits of having your own chain is that you can kind of design the economics of it in kind of whichever way you want. So, for instance, we have a chain that the Saga team and the foundation have launched itself, which is called Saga EVM. It's kind of where we um, stick the DeFi layer essentially of Saga, because liquidity is hard to design in a multi-chain fashion, because a lot of the primitives that exist just don't assume that there is a an infinitely horizontally scalable architecture essentially. And so until that's available, it's like the existing primitives just don't take advantage of that essentially, right? And so um, but we ourselves have launched essentially a chain, and in that Saga EVM chainlet, we've designed the economics such that users never have to pay gas. We have like a different way of doing congestion control, but gas is like essentially paid by our platform by itself essentially. And so um, the benefit of this is that AI projects, we have kind of like a different gamut of various use cases people are designing for. But what they'll do generally is they'll launch a chainlet independently, not by the agent by themselves, but then design the economic flow that works really well with agentic activities. And so um, I think we're not quite there yet, but we are almost there where you can kind of do this permissionlessly. So right now, the launching of chainlets is currently, I would say, whitelisted by us. We just hold. We have this thing called P Saga, which is like what's called Platform Saga. It's like a token that you need to launch chainlets, and currently we're the only ones who hold it, and so it's like no one can launch chainlets. We within the next, I would say, month, we're gonna convert everything to use our stable coin that we're launching called D, and users can go and essentially start permissionlessly launching chainlets. And that's, I think, when what you're talking about will really come true, because you can have agents kind of launch chainlets pretty affordably. I think right now we're clocking in. So when someone launches a new chainlet within our platform, it takes about, I would say, 2 minutes to spin up a chain, and the cost is around, I think it's like sub $500 a month essentially for a chain. And so I think our internal goal has always been sub $100. That has been our goal. But we're at about, I think we're like maybe at around $250 per month essentially for a chainlet. And so this is something that people can just kind of spin up naturally by themselves. We like our goal ultimately has always been like, maybe we want a college student who's just kind of experimenting with blockchains to just be able to spin up a chain. I think if you go to like a RaaS product today, the business model of those RaaS products is earning money from launching these chainlets, and they charge something like some ridiculous amount of money, like $50,000, $100,000 per month, which from our perspective is not where we want to get to. And so from I think yeah, once that happens, it's like, yeah, agents can kind of arbitrarily go and launch many different versions of different chains and have a chain on its own that essentially can design the entire token economic system itself, essentially based on that. Yeah, I think that will be a really exciting time, and it's something that we're working with a lot of builders to enable, essentially. So
That's sick. In terms of use cases, uh, my read on app chains, and you call it chainlets, which I think it's your language for
yeah,
that.
yeah, that's right.
Um, I think they're great because the specialization um, gives meaning to some functional and non-functional aspects of the chain that maximize or optimize for that use case, and that's the glaring difference between a general purpose chain and an app chain. They are tuned to different standards or to different parameters to yield or to optimize for that particular use case. Um, in that regard, what were the use cases that you found most interesting that people have used Saga to launch?
Chainlets, as mentioned, is essentially like, we call it chainlet because it's a chain with the security part just kind of ripped out essentially, and it uses shared security. But chainlets are pretty general purpose. You can kind of you can imagine it almost like um, um, like Docker containers essentially. So you can technically, as long as it speaks the same language of how we do the bridging and routing between the chainlets, you can kind of run whatever you want within that kind of software stack. And so technically, you could run, like a like an optimism stack within our chainlet platform, essentially, pretty simply, as long as mentioned, the language that the chainlet speaks to each other are supported within the stack. And so, um, uh, because it's general purpose, we were like, where do we want to begin the in terms of adoption for this? And the early on, what we kind of identified is, let's try gaming, essentially. What we originally, the thesis was, game companies are looking to adopt blockchain technologies, but they really don't want to deploy on a shared environment, because game use cases are a lot noisier than what DeFi applications are generally required, essentially. And so, generally speaking, when you try to do this on, like Base, for example, or even Solana, it's going to be too expensive for the game providers to do. Turns out, one of the things that we've been noticing is that trying to put game state on chain is not something that game developers are that interested in. And so, what we've transitioned slowly over time is, we still are interfacing with a lot of game companies, but we actually don't. It's very different from trying to put game state on chain. It's like we are now talking to them about maybe putting agents that utilizes our DeFi channels and plug them into the user acquisition part of a game developer, essentially. And so you can imagine, maybe it costs some amount of money for them to hire a community manager to kind of manage their Discord. Our We have a solution that we're working with a builder, essentially, that allows them to replace and put these agents inside of their Discord channels, essentially, that does a lot of the management of the Discord services, essentially. And what we plug in there is like the ability for people to buy games, maybe buy certain items from the bots, essentially, based on the conversations. And everything is piped in using essentially our stablecoin that we're about to release, essentially. And so, um, that kind of use case that are like game adjacent is like where most of our efforts are these days, because the game developers themselves for actual game state is like they I think a lot of game developers are having they're suffering in terms of like revenue these days, and they're not going to start experimenting with wild on-chain data stuff, essentially, when they're trying to essentially meet ends. And so, from our perspective, what we do is, let's figure out ways to help with user acquisition, various things ancillary to their businesses, that can help on chain, and finances and activities around like payment rails and stuff like that is something that crypto has already been proven to do. And so a lot of our focus has been kind of focused around that.
Yeah, I'm not a gamer anymore, but very relatable. And um, one of, and I'm gonna just try to double click on the gaming stuff, because we saw, I want to say 1920, during like the pandemic years, a lot of play to earn was the language that we used in the industry. Most games were not necessarily trying to use chains for the game state, but for the in-game assets. And I totally lost track of that. I'm so deep into other stuff that, and because I'm not a gamer, I'm not paying attention to that at all a lot. But digital assets are still a thing, right? They're still there in the gaming industry. We are in this kind of weird convergence for RWAs on traditional finance, and whatever other real estate has been a big thing coming up. And now I've seen countless private credit coming on chain headlines in the last 2 weeks. I'm like, I've been talking about this for 10 years now. I can't believe this is finally happening. So in that sense, um is there a cross sector economy emerging? Because I'm assuming, and I want to validate that kind of vision of, if you have these many chainlets and app chains, and they have this common thread to them, and shared liquidity and routing, I can only imagine that all these intersections between sectors would be just made easier just because it's running on a brother sister family environment that everybody talks to each other and understand the language. What's that looking like in terms of, you mentioned adoption? I mean, maybe that's where we're going with this. What's the adoption pattern you're seeing as more industries get along?
Yeah, it's actually kind of interesting too because like every ecosystem kind of approaches this in a slightly different way. Um, I would say there's a wide gamut of like degen to more established kind of use cases that are really good for chains, and every chain kind of approaches it in a different kind of spectrum of that. Essentially, I think what we are trying to build out is as because of the liquidity integration layer, which essentially connects Saga to like every other blockchain ecosystem out there. What we can do is actually like kind of tap into all those assets in every single one of these chains. And this is something that we've been talking about. This is more kind of on the DeFi side. It's not related to the gaming, but it will once I start talking about the uses of this. But like right now, we're really focused on the DeFi on chain, and what we've noticed is a lot of chains are very like protective of their TVL, which is like, hey, they want, which kind of makes sense. They're judged by how much TVL that they have on chain. However, like realistically, um, you can't tackle everything all at once, right? So you're going to have to start specializing a little bit within kind of the DeFi land, and whoever kind of connects everyone together is going to be the kind of the winner of all this. Because from our perspective, we don't really have a lot of opinions about everything has to be done within Saga. So what we've done, what we've identified is like, hey, there are assets out there, there are communities out there that are good, let's say like asset holding. So these are things like Bitcoin, maybe I would say something like XRP, SUI. These are like assets that have a lot of value, but they don't have a lot of use cases yet, essentially. And on the other side, essentially, we see like assets and communities that are very good at generating yield. Like they take a stable coin in, they give you like 10%, 15%, something like that, right, on that stable coin. And what we're trying to build out with our DeFi ecosystem is let's match those two together, right? Why are we trying to wait until Bitcoin has native yield generation, or SUI has native yield generation, or XRP have native yield generation? What we should do is we should import those really good assets into Saga, and then figure out a way to convert that into tapping into the yield generating activities that are happening in other chains, essentially. And so we're going to be this like kind of cross chain meeting point between those two kinds of things. And so that's not related to gaming, but how it relates to gaming ultimately is what we've noticed essentially is that gaming is kind of similar, where let's kind of take a step away from the NFTs and the assets essentially, and even just talking about value. Games churn through like a ridiculous amount of dollar value that through their systems essentially. Like compared to crypto, it's like the amount of dollars that flow through various, even like a small or mid-sized game company is like dwarfs anything that happens in crypto essentially. And so what we can do is make that connection similarly as well, where you have this cash flow essentially that comes in. Maybe you want to tap into this intersection point where yield is a little bit better. And so Saga can become a really good place because from the gaming company's perspective, they can launch a chainlet that manages all this, but they're tapping into the economies of blockchain across all the different ecosystems that maximizes yield or whatever they want to do. If maybe they want to convert their money into something that's a little bit more like store of value, then maybe we connect them to Bitcoin essentially, right? And so these are the types of things that we're seeing on our side, at least. It's like as opportunities and as kind of avenues in which companies want to plug into the broader economy ultimately. So
As you moved from career to career and found yourself building Saga, what were the things that you ported from, say, your days at Intel or as a M&A consultant into what you do? Because this is one of the things I love the most about crypto is the diversity of backgrounds that we get from builders. Right, I've been doing We've crossed 215 interviews the other day, and I've spoken to a wide variety of people over these period, and it's so incredible how diverse the backgrounds are. So, what did you bring from these other experiences that you feel are very useful? And what were the things that like, no, this doesn't apply to crypto. I can't do this here.
Actually, surprisingly, like a lot of things are were pretty relevant to what I do here. So at Saga, I am in charge of a lot of our DeFi expansion right now and general like economics of like our tokens and stuff like that. So the really cool aspect of it is in DeFi, in understanding how certain flows of money happens, it turns out my background kind of in like system design and engineering is actually super helpful because it's like I mentioned like queuing theory. It's like a lot of the times when people talk about like, okay, so this DeFi primitive, the way it functions is like it, have these collateral assets and it moves. Understanding how the architecture of all these pieces fit together is very helpful when you've done a lot of like system design essentially. And then the economics part, obviously, from studying in business school and also going to like doing investment banking and stuff like that. It's like that flows in a lot with how to interpret kind of like the economics of how funds flow between the different protocols and so I don't know. I haven't really obviously I would say every single startup in the world um, has a portion of it where it's just like founders just are operators essentially. And so that probably is I don't know how relevant that is to things that I've done before, but it's like, it's things like how do I maintain and make sure that my company is registered properly in these jurisdictions, like, that is things that you learn along the way, just being a good operator. But everything outside of that, that's a little bit more cerebral with my job. It's like a lot of the things that I've always worked on has been super, super relevant. Um, yeah, I mean, it's like that's if I talked about earlier, like I didn't want to go into engineering because I didn't want to go in super deep into like one small topic, and like I didn't want to become an expert that like interchains between cores on like a processor or whatever. And I wanted to broaden out, and being an entrepreneur like this, especially in the blockchain space, is like it kind of gives me that opportunity to like learn, have a very wide set of understanding of what's going on. So I don't know. I've been really enjoying the blockchain space. I've been here for I don't know, like 8 years now. So in the blockchain space, I wouldn't go anywhere else for now. So
Love that. Awesome. In terms of, and I would love to double click on that because yes, it's super challenging. It's a lot of intellectual curiosity, but it's also an industry that doesn't stop, right? The blockchains are running 24/7. There's no closed markets. If a president of some country tweets something on a Friday evening, you're gonna have that, trickle down through the weekend. Nobody cares, right? So, what's your recipe, if you have one, or your routine to stay healthy and sane while working in crypto?
well, I mean, I think I think people overestimate what co-founders do. My recipe is I rely upon my team, who are rock stars essentially, and yeah, it's like uh, uh, it's not something that I can manage myself. It's just not possible. And so I am lucky because in Saga we have four co-founders, and I have not only those folks but with the rest of the team are fantastic. And so I would say that's the primary thing. And then from like how do you keep sane in general? I don't know. That's a different conversation.
You don't.
Yeah, I think like especially like with like price volatility and market volatility, it's like that's what we signed up for, right? It's like we knew coming in that this is gonna be a more volatile, more um, if I use a euphemism, more interesting space, right? And so
Dynamic.
yeah. It's something that you just I don't know, over time you get used to it. You have ups and you have downs, but try not to focus on it. We're trying to build something cool. And being an entrepreneur is always like that. It's like there's always a risk. At least on in crypto, there's there's exciting moments too. So a lot of the times, I think a lot of startups people start, you start and then you never get adoption, and then you kind of like fizzle away. And so at least crypto gives you, I think, a lot of opportunities to swing and make interesting products ultimately.
From your non-crypto days as a computer scientist or as a banker, do you have anyone calling you every time there's a new Bitcoin all-time high and say, "Hey, how do I get in now?" Do you onboard people to crypto? How do you do that? Do we have a welcome to crypto kit that you offer? What's the conversation like?
I generally try not to evangelize too much. I don't know. I'm not a very good salesman, I would say. I when if people have questions, and if people in the past come and ask me about it, I will definitely give them my advice. Recently I think the big thing was, I have a lot of friends who are still like in investment banking. They're like in more senior positions now, obviously. But recently, the big thing was with like DATs, for example. They were like, "Hey, how can we get into DATs?" Because that's a really good convergence between crypto and like a traditional finance.
It's a wrapper.
Yeah, it's a wrapper, exactly. And so, I banking, at least for what like advisory work that I've been doing, and a lot of my friends are doing, is a lot of it is like giving advice to clients on whether or not this is a good idea, right? And becoming a DAT is like kind of a one of the strategic alternatives that you can do, right? And consider essentially. And so I thought that was really interesting how quickly they picked that up. And, a lot of them had questions around how to do it and like what's going on, whether or not they can, there's long-term opportunity here, like these kinds of stuff. And, I think we're going to see more and more of this because, what's happening essentially is that, and I don't know, I guess this is a good thing and a bad thing because, crypto is like growing up a little bit, right? It's like it's like at the cusp, I think, of becoming a serious asset class, and with that comes interesting stuff. But also, it changes the culture, I would say, of what happens in crypto over time. And this is something that I've noticed, and I'm a little bummed out because the back in the day it used to be a lot more. I would say like I don't know how to describe it, like cypherpunk, like a lot more of it was like, hey, let's do this really interesting, crazy shit that like, will people really want? It's like, we don't know, but we got to try it before we find out. A lot of that is like kind of gone now because, it's like slowly evolving closer and closer to fintech essentially, which like has established players, has established playbooks. And so I'm kind of looking forward to the day where crypto kind of goes back into the more wild times, in my opinion. Um, but that will happen. It's just right now people are, it's like people have very short attention spans, and so right now the focus is how do we institutionalize all this existing stuff. But once that happens, there will be another wave of kind of innovation that happens alongside it, and so that's usually when I get excited. I think this period is exciting, but it's not like my primary way of
It's
appreciating
like your
things.
your past is coming to get you. Is that what
No,
you're
it's not
feeling
it.
right
It's
now?
just it's like if I wanted to do that, I would have just stayed in yeah, I guess it's like I would have just stayed in traditional finance, right? So
Yeah, I think there's space for both. Actually, I had a panel recently at Zeebo, and one of again, I also joined because of the Bitcoin white paper, right? That's what drew the interest. And now we're talking about like the suit and ties are in the room, and you're like, well, that's not what I signed up for. If I wanted to be here, I would have stayed at the bank that I worked when I first read the damn paper, right? So I think because it's permissionless, and that's kind of where the paradigm shifts, there is space for everyone. So if the institutions want to be here, and mind you, not everyone is going to be their own bank, right? Some people are not at all qualified to be their own bank, so they won't. But for the ones who are, who want to be self-sovereign, I think the space will be there. So the permissionlessness of this, I think, will continue to be something to be pursued and all of that. So, in talking about industry like that, what do you think is the one thing we must fix right now to avoid working another decade or more and then realizing that we did not fix that one thing and we are back to square one? So, what would be that one thing and why?
it's battle testing. That's what we need. Um, Based on um, I think DeFi is like has an incredible future because there's some really interesting things you can do with capital base. And I think Vitalik kind of talked about this, which is how do you, converting essentially like crypto into a savings account and having that that security of a savings account is something that we there's a lot of demand for, because like giving money to a bank, there's generally lots and lots of transparency, and there's a lot of like uncertainty of exactly what happens to the money that goes into it. Whereas with DeFi, everything can be on chain and verified, which is like there's a value to that. But I don't think as an industry we're quite there yet, where we can design battle tested applications that can onboard, for example, like a Fidelity, for example, today. We saw that with various hacks still happening, a lot of leverage in the system that introduces a lot more risk, and every single time any component of the ecosystem becomes more kind of obscure via these like DeFi vaults that essentially was not really DeFi. It was more like a custody solution that a curator can kind of go doing whatever they want with. Every single time you introduce something like that, and the demand for yield from those goes higher and higher, it always introduces more risk into the system and blows things up essentially. And so, that's the kind of battle testing that we need, in my opinion. I think we've been talking to a lot of people about, hey, would you like to bring some of your treasury or dollars that game companies are bringing in on chain essentially? And I would say the biggest reticence is the security of it essentially, right? And so I think we're still quite early in that, especially because of how often hacks and exploits are happening. It's getting better. It's getting much, much better, but we're not quite there yet for institutional capital to move in my opinion.
I think I tend to agree with you, but also we're largely outsized as an industry when it comes to frauds and scams and hacks versus the traditional industries, man. Like, of course, the base is different because the amount of money is still significantly smaller in crypto, but proportionately, like the fines and penalties that are the things that are found in traditional finance are still outsizing what happens in crypto. I love the chain analysis reports on the frauds and the scams and all that. TRM also does a great job at that, and I think, as you said, as if we want to capture as an industry all that capital, all that money movement, then we need to do better than what is in place right now in testing and making sure that obscurity doesn't have a part to play. We don't want to go back to 2008 anymore. So that portion is absolutely something challenging. Now we're about our time, and it was a great conversation. Great to know you, Jin. How can people learn more about you and Saga and get in touch if they want to launch a chainlet?
The best is join our Discord, join our community. Follow us on X, and if you just message the account, there somebody will respond essentially. And so that's the best way, to be frank.
Awesome. Thank you so much, man. That was a really interesting conversation, and good luck with the project, and more chainlets for everyone. I hope, and hopefully we'll maybe bump into each other in real life in a weird crypto event somewhere.
Yeah, sounds good, man. Wonderful conversation. Thanks for the time.
Thank you. Catch us online. We're on Instagram at BlockDropsPodcast, on Twitter at BlockDropsPod or 0x Mauricio. We're on Lens at blockdrops.lens. We have a newsletter on LinkedIn. Write to us at blockdropspodcast@gmail.com, and you can listen to the BlockDrops podcast at Spotify, iColab, Faberboom Tech, and all of the other major streaming platforms. Yay! Shout out to Jin for sharing so much of his story with us. I hope you guys enjoyed it. Also, shout out to Mariah Masters for making this conversation possible. Don't forget to leave the ratings on your favorite player and check out the merch store at blockdropspodcast.xyz. This is all for today. Stay rare, stay weird. LFG.